I'd like to start with your view on the state of residential housing at the moment, because the string of economic data that we've been getting do show improvement. New home sales, existing home sales, surprising a lot of people. Yet these are often lagging indicators. You've got your eye on the ground. How much do these kinds of housing metrics reflect what is or isn't happening on the ground?
Sure. It's really been quite fascinating post the stay-at-home orders, how things have accelerated. Atlanta buildings, we buy heavily discounted real estate in public markets. And, in mid-March, everything was on sale. And what we found was that the single family home for rent market and the home builders were very depressed. We already knew there was a good tailwind from millennials moving out of cities and moving out of apartments. But what we didn't expect is what happened really starting in mid-April was an acceleration of people moving out of apartments and moving into single family for rent, moving into and contracting to buy new homes. Some of the most recent data suggests that single family rental rates are up 3 or 4%, while apartment rental rates are down a similar amount.
So, Jonathan, then is this more for folks looking because they want an actual house themselves, or is it that they are actually really just trying to get away from urban centers and get more towards suburbs and other areas where they feel like they have more space?
I think it's a combination of both. I think we already saw places like Manhattan and Dallas and San Francisco seeing population declines as the millennials were starting families and wanted to live in a home, in a single family home. I think that being stuck in an apartment through the stay-at-home orders accelerated that, right? How do I get into the elevator and get downstairs? Who am I going to see in the hallway? How are the packages coming in? I think it really turbocharged that move that anybody who was fence sitting when I'm going to go said, I'm going. And I don't think that's going to be, it'll calm down from the surge we're seeing, but I don't think that's a trend which is going to slow and reverse. I think that's going to continue to be a trend in place for the next 3 to 5 years.
Right, and it's not limited to the tri-state area, of course. We see this happening across the nation. But when we talk about housing and real estate in general, it's incredibly local. There's some big geographical differences. Short of investing in physical real estate, an actual single-family home, as an investor, what is the best way to capitalize on specific geographies without risking exposure to perhaps some of the weaker areas?
Right, sure. So what we're seeing is a company like an Invitation Homes is seeing a real resurgence in demand. They're driving occupancy, they're driving rental rate growth. They are leasing homes in major markets in the burbs to people that are looking for a home, can't afford it, but don't necessarily want to commit to buying. But then you're seeing companies like a DHI, D.R. Horton, which is seeing a meaningful demand pickup in their markets for first-time homebuyers. Places like Texas and Florida, where you have no state tax, are seeing the biggest surges in new contracts.
With regards to then the desire for folks to sort of buy these homes, do you see sort of any imbalance being created with regards to the economic conditions, and that maybe there is going to be a large portion of the population that maybe isn't going to be in a position financially to be able to afford a home? Or are we just talking about such a different, I guess, segment of the population that's maybe a little bit more secure in their jobs and their finances, that that'll be enough to continue this trend?
It's a great question. Clearly, mid-March, we were very concerned about, are people going to pay their rents? Are people going to be able to afford to buy the homes? Is the mortgage financing going to be there? And what we've seen is they're getting their rents, they're buying homes. And one home builder took the 30 million people who have filed for unemployment insurance and did some demographic work on it and said about 4 million of those people would have been entry-level home buyers. The other 26 million were not entry-level home buyers anyway. So there is some impact on affordability for individuals as a result of the unemployment rate and people being unemployed, but it's not the sweet spot of where the single-family home market was pre-COVID or is today.
And Jonathan, in contrast to single-family homes and their prospects in the coming months and years, there's less enthusiasm and, in fact, lots of pessimism when it comes to commercial landlords, particularly in places like New York City. Your fund has been shorting a couple of big players here. You see these kinds of companies facing an existential hurricane. When is that hurricane going to hit? When are we going to be in the eye of the hurricane?
Yeah, that's a great question. And, New York was in not great shape in the office market going into COVID. You had the tax reform, which made it more expensive to operate in New York State, New York City. Then you had WeWork and other co-working tenants being really the only demand driver of space in New York. They obviously have imploded in the fourth quarter. They have 15 million square feet of space. That could be cut in half or more. And we still have 24 million square feet of new space being built. So you have a lot of space coming back to the market. At the same time, COVID comes around, all of a sudden, whether it's Morgan Stanley or BlackRock or JP Morgan, and they're saying, hey, we're maintaining high productivity with people being home. Maybe we don't need to bring everybody back. Maybe we'll do it on a cycle basis, 2 days in the office, 3 days at home. And all of that means you need less office space. And so I think the New York office market could see vacancy rates going up 10 to 15%, could see rents falling 20+%, and the assets themselves being revalued. We think it's going to be a very difficult several years until this thing works its way through and it finds equilibrium. I don't think, you're going to have these financial institutions giving up all their space. I think there's going to be this rotation of people, more flexible work conditions. Now that we've seen the productivity is quite high with people working from home.